Good afternoon and welcome to this timely conversation and roundtable on technological advancements and the future of financial inclusion. My name is Herman Smith and I'm the Executive for Behavioral Economics at Nedbank, and I have the privilege to facilitate today's conversation. At Nedbank, our deep purpose is to use our financial expertise to do good for individuals, families, and businesses and society. To this end, we're passionate about the transformation role of the financial sector and its need to play it to contribute to building a fair and just post-apartheid economy. This contribution should be multifaceted, but firmly anchored in the financial needs of the excluded and underserved. These needs have often been hard to meet on commercial terms, but increasingly technology provides new avenues to building and delivering financial solutions. Today, we brought together a panel of experts from academia and industry to discuss and unpack the opportunities and challenges that technology advancements will bring our way as we seek to increase and deepen financial inclusion. As we progress our conversation, I trust you'll find that meeting the financial needs of more individuals, families, and businesses in a meaningful way is not only a moral imperative, but makes business sense. To start our conversation, I'll introduce our panel for today. Representing Nedbank, Mfundo Clement Nkulu, our Chief Operating Officer. Mfundo is passionate about technology and financial inclusion and was a driving force behind the topic we're covering today. Hello, Mfundo. Please greet the audience.
Hi, Herman. Good afternoon, everybody.
Thank you for joining. Mfundo was appointed as Chief Operating Officer in 2015. He joined Nedbank in 2004 already as head of Nedbank Africa and went on to head up corporate banking in 2005. He's been a member of the group executive since 2008 and managing executive of Nedbank Corporation in 2009. He was appointed to the board of Nedbank Limited and Nedbank Limited Group in January 2015. And he also serves on the board of EcoBank, a transnational incorporated in which Nedbank holds a 21% interest. As group member, Mfundo is closely involved in the oversight of the business strategy across Nedbank and is responsible for leading and delivering changes to our target operating model. Mfundo is very close to our digital transformation journey and making sure that it's fit for purpose. And we're excited to hear from him just how that is played into how Nedbank does its business and how we see financial inclusion. Next, I have the pleasure of introducing Velokosini Matsabulo. Velokosini is passionate about understanding the drivers of financial inclusion and has published work provides deep context for our discussion today. Hello, Velokosini. Please greet the audience.
Hi, Herman. Thanks for having me today.
Of course. Velokosini is an empirical economist who works on financial development and socioeconomic issues in South Africa. His research largely focuses on financial inclusion. He holds a Master's of Commerce degree in economics from Northwest University and recently completed his PhD in economics at the University of Cape Town. He has a substantial and diverse research background, training in microeconomics, econometrics, and macroeconomics, a lot of modeling. He has done research work with Southern African Labour and Development Research Unit, SALDRU, at the University of Cape Town, has taught at the University of Technology, Peninsula University of Technology, and is currently a lecturer at the University of Cape Town, joining me just down the road here in the Western Cape. Next, I have the pleasure of introducing Mamapudi Nkadima. Mamapudi brings her many decades of market research experience and deep understanding of customers to this conversation. Hello, Mamapudi. Please greet the audience.
Hi, Herman. Dumelang Sanbonan. Thank you.
Great having you here. Mamapudi is a strategist and marketeer at heart and has been the managing director of Africa Response for the past 11 years. Prior to this, joining Africa Response, Mamapudi founded and led MEDA Strategic Research Consulting. For over 10 years, she has held leadership positions in blue chip organizations such as Unilever, Standard Bank, Century International, and has done brand and management work roles across sub-Saharan Africa and South Africa. Mama Pudi has pioneered several research projects to unpack unique business opportunities and create reliable and actionable business insights for businesses across sectors. One such research project is unpacking the dynamics of stockvelds, the hidden economy, a truly South African phenomena where the previously disadvantaged South Africans create their own ecosystems of savings. And we definitely want to hear more about that later. She's a strategic leader, trusted advisor, and we're very excited to have her on our panel today. Next, I have the pleasure of introducing Thabo Mukuna. He is the General Manager at the the Banking Association of South Africa. Hello, Thabo, please greet the audience.
Good afternoon, Herman, and good afternoon to everyone who's in the meeting. Thank you.
Great being here. Thabo has been in the financial sector for more than 30 years in various roles and is responsible for representing the industry at the financial sector charter negotiations, the possible industry collaborative initiatives on SME development, and dealing with a number of stakeholders, including government departments, with a view of influencing policy decisions that affect the industry in many areas. As you can see, the panel collectively brings a rich set of perspectives that we'll use to unpack some of the most important questions the industry faces at this juncture. We will start with who are the financially excluded, and then we will move to the question of how digital transformation might enable us to reach them. We then get practical and ask how technology is currently being leveraged in a meaningful way, and conclude with what still needs to be done and where do the opportunities lie. Before I pose questions to our panelists and get their insights on these different questions, I'd really like to open up to the audience and ask you to provide your thoughts and considerations to this discussion. So we'll start up with a poll. So you'll see a poll pop up on your screen. The question is financial inclusion important for South Africa's transformation journey? And here the response options are yes, no, does more harm than good, or unsure. So if you guys can look at this question, give it some consideration. We'll give you a minute to respond. Really important at the beginning of this conversation to get your inputs and your thoughts. Where are you at when you think about financial inclusion and why it's important? Please let us know your thoughts. So the question is financial inclusion important for South Africa's transformation journey? Yes, no, financial inclusion does more harm than good for South Africa's transformation journey, or I'm unsure. If you can please respond to that question now before we move over to the panelists. Okay. Just repeating that one more time. You should have the question up in front of you. There we go. This is the poll results. If you can see it in front of you, is financial inclusion important for South Africa's transformation journey? 94% of you said yes, 1% said no, 0% says does more harm than good. I assume it's not because you feel it doesn't do any harm, but the upside, I think you see as very important. And then 5% of you say you're unsure. So I'm really excited today to be able to further shape these thoughts and opinions that you have and see where we end at the end of today with this specific question. So our first question to the panelists to get us started is, who are the financially excluded and why is it important that we reach them? So I'm just going to reiterate that. Who are the financially excluded? So we talk about financial inclusion. Who are the people that need to benefit from this? And then the second part of the question is, like, if they're excluded, why does that matter? So we'll first go to Mama Pudi, who will give us her views on this.
Thank you, Herman. And what an interesting poll outcome. And thank you for all realizing that financial inclusion is important. So for me, my response to this question will be based on a number of factors. Number one, it really depends on what do we mean by financial inclusion. Or it depends on what do we mean or who do we have as financially included. So that the two sides of the coin will help us understand. But the four different things that are critical. Number one is financial inclusion or those that are financially excluded. Is it because of not having access to financial products? Number two, is it because they are not well protected, so they're scared to be included because they can get into the wrong side of being in the financial sector or utilizing financial products? Number three, it's really about the level of financial education. Are they better educated? Do they understand? Is there some literacy, even in terms of understanding financial terms? I'm sure you'll agree with me that there's a lot of terminology that in my home language, Sepedi, there's certain terms that I can't say. You say a debit, I don't know what that is in Sepedi. So when we're talking about financial literacy and someone is helping people understand for them to be included, how do we communicate? How do we say it? What language do we use? Is it the English language? Is it the Afrikaans language? If it is a vernacular language, we know the diversity from a Zulu to a Sotho to a Pedi. So how do we really do that? So for me, those are the three important areas. So to understand it, to unpack this from the broadly, there are 3 or 4 different areas where I see people that are financially excluded. Number one, it's people that operate outside the formal realms of the economy, particularly what we'll term as the informal market, and also people that we term foreign nationals. And the question that was asked here is that why is it important? So who are the financially excluded and why is it important that we reach them? The reason why I'm mentioning this too is you've got people that are operating outside the formal economy, they are excluded. People that are foreign nationals, they are excluded. And why is it important that we have them included? Is because they are part and parcel of the economy. They are making an impact in the economy, whether we employ people, whether they've got the right documentation or they don't have. But the question is, how do we then start to bring them to be included? What are some of the things, whether it is from a regulatory, whether it is from a government perspective, what are some of the things that we do? Because what is key is they are bringing value to the economy. There are some activities that they're doing. And just to bring it closer home is, we know that, and Herman mentioned it when he introduced me, that we've got over 11 million people in the country that I'll use the term playing because members of Stokvels say we're playing Stokvels. But I mean, they are playing Stokvels, and Stokvels, as we know it, is a means of saving. It's a means of putting money so that for rainy days you can access funds. We know that a large percentage of this 11 million people, which contributes close to 49 billion rand annually, are excluded in the financial sector. And the reason why they're excluded is because they keep on doing things which makes them comfortable. And what makes them comfortable keeps them outside of the financial inclusion. And is it because there is limited understanding, or is it because the type of products that are offered continuously exclude them? Those are some of the questions that we keep on asking. Number two is that we've got a large percentage of people that operate outside the banking situation. For example, I mentioned foreign nationals. I'm sure on the call here, we've got people that employ people from all over the African continent. They are providing the needed services, be it our helpers, be it our gardeners, be it our laborers, or people that serve us at restaurant. Now, are we including them? Are we excluding them? I believe those are a large chunk of people that are financially excluded. Whether it's because our structure, our financial system forces them to be excluded, the question is it important for them to be included? What can be done in the rightful, in the responsible manner so that we can start providing solutions? It's not always about what we do, it's also about how do we do things to bring people into the realm of the economy? My last element is really just talking about the majority of operators within the informal trade, be it our hawkers. We know there's a strong, thriving operation as in our people that operate within the hawking industry as hawkers. Every corner of the street, a taxi rank, we know that that operation is very strong in terms of cash operations. Are they included within the financial, do we consider those included or excluded? My opinion is because a large percentage of them still operate using cash, and we know the risks and the challenges of cash. I will classify the large percentage of people that are doing are hawkers, that they are extensively financially excluded. There is the youth, and we know that the bulk of our population comprised of the youth. And the youth is because they're newbies, particularly youth from rural areas, youth from poorer communities. We know that they are the future. And if they are the future, how do we bring them on so that they understand financial from an early stage? Rural communities, which often at times are excluded because they are further away from financial services, from financial mechanisms. The last group is really our senior and elderly. We know that in South Africa, through the SASSA offerings, a lot of our elderly people now are active in the financial services. The reason is because SASSA gives them cards, our banks give them cards, but are those cards keeping them included or more excluded? If we know the behavior of how people operate, that I've got my card, I'll go and withdraw money on the 1st or on the 5th of the month. Throughout the month, I don't interact with financial services. Are they included or excluded? Those are some of the questions that I'm leaving to the table, because I believe we've got some people that are financially excluded, and it's the necessity to understand the behavior so that we can bring them into the economy and they can be financially included. Thank you, Herman.
Thank you, Mamakwidi. I think you've said a number of very important and striking things. I like the categories. We're talking about informal. So when we talk about excluded, often those individuals that we seek to bring into the formal financial sector come from the informal economy or operate in there, and that's what its flavors which make it the job particularly interesting in order to reach that. You talked about rural and urban, you talked about youth and newbies, which obviously have kind of like financial education component to that as well with the seniors. So interesting dynamics there. Obviously foreign nationals, also important conversation point to have. These individuals operate within our economy, and their ability to access the financial sector has a large impact, not only on them, but the people that they interact with in the economy more broadly. So thank you for that. Just a comment, if you'd like to ask a question, we will take the questions and pose it to the panelists at the end of the panel session. You can do that within the Q&A session. Thank you for all of those who have been so active in providing it today. Mamakwidi, thank you for that. Next, I want to go to Velokosini. You've done lots of research in how we're doing in including the financially excluded. Can you give us a sense from your research, who are the financially excluded and why does it matter?
Okay, thanks, Herman. Well, these are two important questions. Well, who is financially excluded and why is it important that we reach them? However, I think the best way to go about answering these two questions is essentially to add a third question and basically answer that question first. In that sense, I think the most important question is, what exactly is financial inclusion, you see? And well, most people always speak about financial inclusion and exclusion, but the two is basically two sides of the same coin. So in essence, financial inclusion is essentially ensuring access to affordable and sustainable formal financial services for all members of the population. So this is not just those at the top of the income earning pyramid, but also those in the bottom end of the income earnings. So oftentimes we speak about we need to sort of include those in the informal sector as if there are two sectors that operate in next to each other. However, we need to understand that people are in the informal sector essentially because they're excluded, right? So in most cases, if not all, households and small businesses in the lower end of the income earning bracket are frequently excluded. And moreover, we see that for many developing economies, these groups make up the majority of the population and the most of economic activities. So now zooming into South Africa. So in 2012, we know that our government scheduled in its National Development Plan to have 90% of the population financially included by 2030. So the country has since seen considerable progress, with 91% of the other population having been included in the financial system, of which 81% were considered to be banked by 2019, I believe, and while 78% make use of non-bank channels and 61% using the informal financial channels. So it's also evidence that, however, that while there is a clear increase in indicators of financial inclusion, a large portion of the economy still, rather a large portion of consumers still remain cash-based. Most transactions are still cash-based. So the key services that South African financial services providers have managed to use to penetrate into the low income and informal economic sectors is the provision, is mainly the provision of transaction accounts, right? So research shows that 70% of South African adults have transaction accounts, which is a very important financial inclusion instrument. And this indicates that the country is somewhat, or rather could send the picture that the country is somewhat more financially inclusive compared to its other counterpart countries. So, well, while this may be evidence of adoption of financial product, usage and sustainability of such product is weakened by factors relating to transactional cost and convenience. So I would rather say an adoption of other key bank products such as credit, savings, insurance, and other financial services are discouraged by factors such as high transaction cost, geographical distance from financial institutions, the need for collateral to secure services such as credit, and terms and conditions governing financial services, among other important factors. As such, a majority of low-income households and small businesses are excluded from the formal financial systems and are left to manage their finances through informal financial groups. Hence, now we see, or we have what we call the informal sector. So it's not because people are just choosing to create an informal sector of finance. The formal sector exists because there are people that are essentially excluded. So to look deeper into this, we conducted some studies analyzing the financial inclusion into South Africa. One in particular, we used the National Income Dynamic Study to look at people's use of financial goods and services between the 4 waves of the data. What we found is that while there's a general increase in the use of financial services in South Africa, this was severely skewed towards households with higher income. So the other characteristics of individuals and households that showed higher usage of financial services were essentially middle-aged, male, white, more educated, urban residents in the Western Cape and in Gauteng. So these people came from bigger households with more employed members. We also find that when it came to likelihood of being completely financially excluded, we found this to be more prevalent in poor households living in the Eastern Cape, KwaZulu-Natal, and Limpopo province. And so in almost in every case, these households were made up of Black people. So I think this is a rhetoric in the case of South Africa. So the study also found that households with low real per capita income and fewer employed members were associated with greater likelihood of financial exclusion, while households bigger in size and headed by middle-aged people were associated with significantly higher financial inclusion and lower likelihood of complete financial exclusion. We also found an increase in the usage of informal financial sources such as loans from machonistas, or what we call a loan shark, and loans from family members, friends, and other employers, which has increased over time, especially within the end or the lower part of the earning bracket. So these findings are also consistent to those of a different study we conducted using a different data, the FinScope, where we essentially investigate the impact of financial inclusion and poverty, looking at multi-dimensions of financial inclusion as opposed to just the usage of financial inclusion. And these studies were basically consistent. So why is it important that we reach these unbanked individuals? So it is important that we reach the unbanked because financial inclusion enables the poorest and the most vulnerable in the society to step out of poverty and reduce inequality in the society. So if we are committed about achieving a broader inclusive growth, financial inclusion is essentially a major step forward or towards this. So financial inclusion strengthens the availability of economic resources through it people can invest into their future, smoothen their consumption, and manage financial risk. So it helps in the overall economic development, and especially for the underprivileged population. And it's also, I believe, it's also a very lucrative environment for businesses whose primary goal is basically to report back to their shareholders, because there's a large data and a large transition of money happening with the unbanked. I think I've covered all the question you've given me, Herman.
Thank you, Venkosini. I really appreciate once again the view of kind of like what is the progress which has been made to date. And as you say, if we look at the top line numbers, it could seem that we are making progress. So we've got an 81% banked indicator, 91% financially or formal financial institutions. And this sounds like good progress. But what, for example, the same surveys show is that between 2019 and 2021, while we've seen some growth in the uptake of financial services, we've also seen a growth in the use of informal financial services during the same period. So if we're seeing the growth in the formal sector, but then also growth in the informal sector, what does that mean about our ability to meet financial needs? And I think that's a really interesting point to take further on as well. Really appreciate the questions that are being posed. Continue to pose that, pop them in there. At least one of them I definitely want to take up at the end when we talk about what to do next. Søren's comment that one of the problems are actually bank employees, and I think reflecting on ourselves and our ability to meet the challenge where it's at hand is very important. So figuring out like who are the individuals who are trying to meet it, through which institutions, and what can we do to meet that challenge at hand, I think is a very important one. So next, Mfundu, if you could take us through your view of who are the financially excluded and why is it important to reach them?
Thanks, Herman. Yeah, I think as others have spoken on this definition of financial inclusion stroke exclusion, yeah, I think it's fair to say this is a graduated concept. Financial inclusion, you can have a bank account and be included in one respect, but not know sufficiently about available products in the market and therefore be excluded from reaching other services. Or you may participate in the formal economy and therefore have access to banking accounts, transactional, and even credit, but not be financially literate enough to be able to use financial advisory services. So it goes across the curve. Inclusion and exclusion has graduated elements to it. The second point I would make is that structurally, it also reflects the nature of our economy. We do have an economy that is highly unequal, characterized by existence of a large informal sector, and therefore, almost by definition, it lends itself to instances of inclusion and exclusion. One of the drivers of inclusion actually is the degree of participation in the economy. This is mutually reinforcing, and therefore, the more people participate in the economy, the more they will require banking services and therefore can be included. On the other hand, financial inclusion, attracting those people outside of the formal sector, can also be an entry point in driving economic activity and therefore economic growth. What we face in South Africa, paradoxically, is the fact that we have high rates of bank account holders. 70% people with bank accounts is high by definition of emerging markets. Yet, we also live with high unemployment rates. 35% is the current formal rate of unemployment in the economy. And therefore, as long as we're living with those levels of unemployment, structurally, we're not going to be satisfied about the levels of financial inclusion that we see. For you, we've mentioned already in the conversation, let's take two types of accounts available to consumers. Oftentimes, we talk of financial inclusion in the context of a transactional account. Do people have access to an account that they can use in order to transact and meet their needs, banking needs, servicing of customers, servicing of suppliers, transacting with others in society, doing money transfers? And oftentimes, you will see that people can access transactional accounts. Then the next question would be, is it affordable to them? Again, affordability is across the spectrum. Sure, at the bottom end of the income range, the affordability question is highest. Then beyond that, you can look at inclusion from a credit extension point of view, okay? There would be certain category of products in the market that would require collateral in order to access credit. That's to curb, I suppose, the associated risk with those products. Alongside that, we've seen a very strong growth of unsecured lending in the market, providing relative ease of access to credit without the requirement of collateral. These solutions are provided to address needs, to address convenience of customers, but by the same token to also extend reach and inclusion. And so we see all of these variations coming through. Then I suppose last point I will make at this stage is inclusion by reach. Oftentimes, banks have traditionally delivered these services through a distribution infrastructure in the main, in the form of branches scattered across the country. The distribution of those physical premises largely informed in the main by commercial considerations from the bank's point of view, convenience of location from client's point of view. Now, these facilities are not evenly distributed across the market. There probably is a much shorter radius of coverage in the urban sector and far less distribution of these physical premises in the rural economy. And herein lies the opportunity that digital transformation then provides. Digital transformation gives us the avenue to deliver these banking services to the convenience of our clients and to allow them the capability to transact when they need to, and to do so at a lower cost than has traditionally been the case. And I'm talking here of new products that have been introduced in the market, including our own, like mobile banking, cell phone banking, a key element of that, using both well-established USSD technology infrastructure that is readily available to facilitate payments, as well as more agile mobile solutions that now put the capability to transact in the hands of the consumer. To grow mobile penetration would, in my view, require a few things. First of all, lowering overall cost of data is a key driver in that respect. And we are aware of the initiatives to open up the spectrum and reduce data costs. Second is to raise overall confidence levels and trust that people have in the system, that they're not likely to lose money by transacting through mobile channels. And therefore, the need to raise cyber awareness and reduce cyber threats is an important element of giving trust and confidence to support consumers to be able to transact over channels with a lower cost to serve. Those are the issues from my vantage point. Thank you, Herman.
Thank you, Mfundo. So I think we've heard come back classifications in terms of the individuals. So we've heard like low-income individuals, Black, rural, with a number of characteristics which are more likely to be excluded than others. Then we spoke about other things which limit our access, such as documentation to access the financial sector, to be onboarded. And then we spoke about other channels of reach, which could relate to cost or other elements that keep individuals excluded outside of the financial sector, or collateral or other elements that require them to as entry points or on-ramps into the types of financial services. So very interesting there. Thank you for mapping those out. Interested in getting to a little bit to the technology solutions to some of those in a moment, but really glad to see like the overview of kind of like those groups of individuals and why that matters. Thabo, if you can give us your thoughts as well.
Thank you, Herman. I think the risk of speaking last is that you're going to repeat most of the points that have been already mentioned. But I concur with the fact that, first of all, maybe the definition of financial inclusion. I prefer, and once I say that, that means there are a number of them. I prefer the one that has that was used by National Treasury in the policy financial inclusion document, which is, to me, simple enough. It says that it is the provision of affordable and appropriate services to those that are currently unserved or underserved. So that is simple enough for me. But then your question really says, but who is excluded? I think my colleagues have already spoken to those. If you look at South Africa, you will find that the majority of the excluded are Black people, just because of our history. You find that if you look at the gender issues, women are excluded because traditionally men were the ones that were preferred to be the ones that are working. And if they are going to be paid via an account, then men would be more included than women. And given the fact that, as Mfundo has said, that we have started with the provision of services from buildings, bank branches. Those were situated mainly in towns and cities. The rural people were therefore logically excluded. So you'll find that we repeat the same things, but I was fascinated by the angle from Mama Bodi that was saying we also have a number of colleagues that have come to South Africa for various reasons that are currently being excluded because they don't have the necessary papers to go and open an account. And sometimes that makes life difficult. If it comes to access, we are also all generally agreeing that 91% inclusion is a good rate, but it is access, the provision of the services. How those services are being used is another story. Are those services quality? It is another story. And when we're talking about the provision of transactional accounts, Mfundo, as the basic indicator of inclusion, I may have an access, a card, a bank card, but if that card is not useful to me in the township or in the rural area because I need cash, then that I may still be excluded while I have a bank card. So again, maybe there is a need to review the indicators of inclusion. What do we mean? And in what instances this relevant discussed? And the provision of the facilities, I think I'm talking to Mfundo to say that you know, if I have a card and I feel safe using a card, it would be better if all those puzzle shops and the shops in the rural areas have got the point of sale service. So that spectrum of moving from the branch to the ATM to the point of sale and to the money in my phone, and making me understand that I can do those things, that would be great. But I'm not going to say a lot because I think mainly I'm repeating what has been said already.
Thank you, thank you. I think, thank you, panelists, for highlighting those groups of individuals which we're trying to meet with our financial inclusion initiatives, those individuals which can benefit from financial services and who have been excluded because of the racial structure of the economy in the past, as well as elements which exclude them now, which are the relevant documentation, collateral, and other participation in the formal economy in some type of way, which will give them that on-ramp into the economy. So I think great to highlight who those groups are. I think we are all on the same page that financial inclusion for financial inclusion's sake isn't important to us. We want meaningful financial inclusion. We want these financial services to meet the needs of those who use them, to unlock their ability to meet their economic and personal goals, and that we as a financial sector or financial sector participants provide them with the opportunity to do so through the products and services which are on offer. That those, as Thabo, you've mentioned from the national policy document, are affordable, so that it's something which adds value. So I think before we go into the next question, I want to open up to the audience. We have another poll which should pop up on your desk. The question is, will technology support our efforts to achieve meaningful financial inclusion? So we've spoken now about the definition and that there are different definitions. So here, use the one which is closest to heart to you. And then we're going to start talking around the role of technology. But before we do that, we want to get a sense from you, will technology support our efforts to achieve meaningful financial inclusion? Yes, no, technology will do more than harm than good in this objective, or I'm unsure. So please, we'll give a minute or so for you to respond to this poll. Please take an opportunity. Okay. Just once again, the poll is, will technology support our efforts to achieve meaningful financial inclusion? Response options are yes, it will, no, it will not. Technology will do more harm than good for this objective, or you're unsure. And one last time, the poll is, we got the results out here. Okay, perfect. So the responses are, will technology support our efforts to achieve meaningful financial inclusion? 82% of you said yes. So there's a lot of optimism in this room. Various participants are very optimistic about the role that technology can play. 2% of you said no, you didn't think so. I think that'll be really interesting to unpack. 1% said, well, does more harm than good. I think there's really interesting questions to be asked here as well around kind of like the potential areas where technology can be harmful to our efforts to achieve meaningful financial inclusion. And then 14% said unsure. So I'm really excited to jump into this question with the panelists, and hopefully by the end of that, the number of unsure will have changed a little bit. So moving over to the panelists, the question is, how is digital transformation of the financial sector related to our financial inclusion objectives? So if we look at kind of this digital transformation and technology which is being deployed, and we see it, we read about it every day, we experience it in our daily lives, particularly with COVID, the acceleration of digitization. But how is this related to our financial inclusion objectives? And I think we'll go in the same order as before. Momapudi, if you can start us off, that would be greatly appreciated.
Move to the next one, Herman. Just move to the next panel person.
Oh, okay, perfect. Valakosini, if you could jump in. You just unmute.
Well, it's digitalization. So, well, I guess in the era that we live in, we can't talk of any transformation without digitalization. I mean, well, especially in finances and access to finance. However, we need to be cognizant of what Thabo and you yourself, Herman, has touched on having meaningful financial inclusion, meaning that the digital transformation or the services that are provided to clients or customers must be aligned to those customers. For instance, in the rural areas, what do we mean by digital transformation as opposed in the urban area? It also goes back to the issue of financial literacy that Fundo touched on. So is basically the services that are provided through digital transformation or digital platforms, are they beneficial or meaningful for the different clients that South Africa has? Because it is evident that, well, in South Africa, our economy is divided into two. There's the higher end and the lower end. And most of the problem is found within the lower end of the food chain, which is mostly people in the rural area, Black people with less level of education. And what do we mean by digital transformation to those people, right? Well, to touch into an answering direction, I think there's a lot that we can learn from what other countries, especially in sub-Saharan countries, are doing in terms of including the unbanked within the most disadvantaged areas of the population in terms of money, mobile money platforms, and the likes. Because, well, in South Africa, for instance, I believe, but however, Fundo would basically touch more on this, I believe, on issues of the available product on digital platforms. What do we mean in South Africa, and which ones do we have? Are they meaningful for the majority unbanked segments of the population?
Thank you so much, Valakosini. Mfundo, would you like to go next?
Yes, indeed. Digital transformation will certainly help solve many of these challenges. Whether we're talking urban economy or rural economy, the needs generally are not very different. People want to be able to transact at the moment of convenience over a secure platform. They want that capability to ensure that their needs are timely met. And therefore, with digital transformation, we're now moving beyond defined hours of transacting. You're almost now operating on a 24/7 by 365 capability. It's even more important for those who are very far from a centers of convenience so that they can be able to transact notwithstanding the relative distance. And so if you look at it from that vantage point, the issue is the provision of that capability, provision of secure channels, as well as alongside that, the capability to deliver the goods, because oftentimes we're procuring also goods alongside services. And so the physical goods also have to be delivered. This takes us to what we call a beyond banking, that actually a bank as an institution through which we save and withdraw money in order to transact in the economy now essentially becomes the shop window. And so we do and fulfill the transaction of a secure banking platform and then take delivery of the physical goods alongside that. And so we see that increasingly as a package that the bank has to deliver to meet client requirements. I think we've got to look at this as a long-term solution, particularly tied to the desire to lower costs of service. And so if we use digital channels, we're likely to deliver these solutions at a fraction of the traditional cost of banking fees. We've got to recognize that the mobile phone has become ubiquitous in the modern era. It is one device that is with us all the time. We carry it with ourselves wherever we go. And increasingly, levels of penetration in the South African environment already above 100%. That means you have a spectrum from smartphones to USSD dependent feature phones. And the banking solutions cover that entire spectrum. At Nedbank, we provide this capability for USSD, meaning that it's convenient and user-friendly for feature phones, as well as for smartphones using our mobile apps, as well as a virtuous platform that allows people to transact not just only with the bank, but also with third-party suppliers and providers of services. And so that is what we see as the future of banking. What it requires, as I've already indicated, higher levels of confidence about the security of the platform, higher levels of confidence about financial literacy and how to use these services, and then consistent improvement of management of cyber risk. Nobody can guarantee that there won't be cyber threats, but banks are at the cutting edge of investing in order to lower the threat. And then as the threat is lowered, confidence levels rise. You will see the uptake and user rates will be much higher, especially if the costs of transacting using these platforms are correspondingly decreased. And so that's the reason digital transformation is at the cornerstone of delivery of financial services into the future. It is what will change the landscape, particularly for those hitherto excluded. It provides us an opportunity to address financial inclusion at scale. And that's the reason it is most attractive.
Fantastic. So you speak about the promise of reach, so the ability to reach more individuals, particularly through their mobile phone, 24 hours a day, which is obviously very different to traditional brick and mortar touch points that we've had with customers in the past, and that this comes at a different price point and an ability to service the customer at a different price point. But then you speak about some challenges related to cybersecurity. You and our participants who have commented have spoken about education, and other comments have really been around the digital divide. Ayanda saying that the financially excluded are hardly in the digital fast lane. So talking around some of those challenges in being able to adopt those channels. And you said some elements.
Yes, I can come in at that point. These are not insurmountable challenges. A digital divide should not just be presented as an obstacle. It is also a source of opportunity. We've seen in other markets, take East Africa, M-Pesa is a solution that is widely used in society. It is a digital solution, mobile phone based. It came into the market to address a particular specific need that they had in that country, particularly given the lower rate of formal participation in the banking sector. And so the tried and tested mature solutions out there in the market. Already in the South African environment, you may think that initially, before the introduction of a mobile phone, we're all using analog phones, and the new technology was going to be a source of threat. It's been in place now for decades. We've long forgotten about the analog phone. And so it will be that kind of transition. My view is that it's not going to be a solution in and of itself. It's going to be a solution alongside higher literacy, financial literacy levels. Banks and financial services institutions broadly introducing financial education programs. And even when digital solutions are ubiquitous and widely used, they're not going to be the only solution. We're not seeking to transact only digitally. This is not an argument against cash or other traditional solutions. What we're saying is that we've got to have all of these solutions available in the market so that we can address the convenience for the consumer, for the client. Then the client will choose what medium to use at what point, what is convenient for them at a point in time. So the fact that you have a bank card does not mean you're not going to need cash. Okay? You go to an cash, you'd use cash transaction when it is convenient. Other times, you're able to transact without having to access cash. And then other times, you don't even go to an ATM because you're able to conduct those transactions on a mobile phone. Now, these are the services that are already available. The issue is to ramp up understanding of these products, to raise awareness, to raise confidence levels, to lower the associated risk. And then all of these avenues are channels that will be used by the market. And then that enhances inclusion rather than detract from it.
Thank you for that additional context. Thabo, from your side, what are your views?
Mine are always speaking the simple English language because I have to translate it to the public that I deal with. I agree, technology will support inclusion. In oversimplifying the concept, we always say time is money. And honestly, if you look at it from that point of view, the time that I spend traveling from where I am to where I will get the service, if I am still thinking about a bank branch, as opposed to doing the transaction on my phone, I have saved time, I've already saved money. The time that I will save in standing in a queue, waiting to be served when I'm in a branch, that already says to me, I have saved money. So the aiding of financial inclusion and the saving of money is very evident to me, and I know that I said I will oversimplify the concept. However, there are still other challenges. We know that we're saying that internet is prevalent, but in some instances, there are some sectors of the population that are still struggling with even the concept of an internet. We know that we have gotten to live with the challenges of power outages and power cuts and things like that. Even for those that do have internet, when that happens, everything comes to a standstill. However, your question is, does technology support inclusion? The overall, I agree with the 82% of the people on the call that said, yes, it will support that. The other issue is at what stage, because I do believe strongly that Fundo has mentioned it, we have to take our clients and customers along with. So the consumer financial education is very important at all stages. I could have a very good phone with a good app, but if I'm not confident to use that and not afraid that if I touch something, I will give my information to other people and my money will be lost, that would be a challenge. And at that role, consumer financial education plays a very important role. In South Africa as well, if you compare, if one compares Kenya and South Africa, it would be interesting to find out what is the role of our regulators and policymakers in this mobile money, as to why is it not taking off in South Africa as it did in those other countries in East Africa, and also our attitude as well as the financial sector. We have always been big banks, and rightfully so. We know our staff, we know the kind of services we provide, and we are world class. When the mobile network operators came, did we take the opportunity to actually partner with them and try and provide these services via them, or did we wait for them to come to us, or is this still not happening? So once again, it's a challenging question that we may have to see, but mainly what are the regulations that probably are inhibiting the proliferation of mobile money in South Africa?
Perfect, thank you. I'm just doing a bit of a time check. We have 28 more minutes to conclude the next two questions and give some time to the audience. So, Mama Pretty, I will open up for your response to this question. I'm particularly interested on the financial education, digital education access, given that you've worked with these customers very closely in the past. Like, is this an area where you see great opportunity or some things that we should be concerned about and look out for?
Absolutely. I think this is an area where technology is a big enabler, as my colleagues have said. It's a big enabler. If you just think about how many people are out of reach with, you cannot reach people these days because almost everyone has got their phone, a smartphone, whether it's a basic phone, but communication has become much better with technology enablement. So even within financial inclusion, the fact that we've got now better reach of people, we've got better ways to communicate with people. But if it wasn't some of the challenges that we see, and I think as Thabo mentioned, some of the issues that remain within the country as in affordability, costs of accessing technology, I think overall as a country and as a need to enable or to create more financial inclusion, technology is definitely creating a biggest impact. Number one, reducing costs, because now I can bank anywhere, I can transact anywhere. If and only if the ecosystem could be in such a way that it doesn't matter who you are, where you are, I can go to a spaza shop, I can go to a hawker, and I can give them my phone number or I can give them my card. Then inclusion will be even more powerful. But unfortunately, we still have the divide where it depends on where you are that you do have access. So yes, it is definitely a big enabler, I think if and only if some of the limitations can be looked into to make sure that we are better enabled and better structured as a country. Thank you.
Thank you so much, Mapudi. A lot to think about there. And I think we had one question from an individual earlier on whether or not crypto asset users are considered to be, financially included. And I think there's a whole other element there of like technology and what it can enable and what it can't. And also then some risks, that digital transformation is bringing into the system, both at a macro level as well as an individual level. All these new products and instruments that we don't understand that could potentially harm us. But definitely on balance, I think both you and the questions that the audience are asking, saying there's a great opportunity here to reduce costs, to reach more individuals. There are risks which we have to manage along the way, but if we're willing to make the investments as a financial sector, as regulators, as academia, and market researchers to take South Africans along on this journey, there's value that we can unlock that goes beyond saving their time to get to the branch, but in new sets of products that can meet needs and take people's participation in the economy even further. I think we're going to open our next poll, which should come up, which will take the question slightly away from the conversation about who's the excluded and what role can technology play into the domain of what are providers currently doing. Like we all know like our unfinancial services, and we see others in the market. Like, do we think financial services providers are effectively leveraging technology for financial inclusion? Can Alexandra, if you can just put up the poll for us to give the audience a chance to respond. There we go. Okay, so I think not looking at the heading, but looking at the question, do we think financial services providers are effectively leveraging technology for financial inclusion? Here the question is yes, no, does more harm than good, unsure. We know that financial services providers are restructuring their entire operating model around digital. Are these changes good for financial inclusion or harmful to our efforts in financial inclusion, or are you unsure? Your response here will help the audience think through their response to the next questions. Panelists. I'll also start weaving just some of the questions in the questions and answer into the panel conversation, just to allow us to address some of those within the available time as well. So panelists, just be aware that there might be some additional angles to the questions, just to make sure that we respond to some of the really, really good and engaging questions that we've received from the audience. More than 30 already. We'll definitely not get to all of them in the question and answer, with a number of other comments as well. Individuals really passionate about this field and providing us with some guidelines in terms of how we can make this financial inclusion objectives more meaningful. Okay, so 20 more seconds or 10 more seconds. Do we think financial services providers are effectively leveraging technology for financial inclusion? Yes, no, does more harm than good, unsure. Thanks so much. Alexandra, if you can post those responses for us. Okay. So interesting, I think the sentiment in the room has changed a little bit. So we were very excited about the need for financial inclusion. We were very excited about the role that technology could play, knowing that there are some potential downsides. Now here we're seeing the response to what we're thinking about financial services like providers' effectiveness in leveraging technology. So we see almost an equal split here between yes and the no and unsure, which means this is something that we should definitely think about. So one thing that is good here is no one thought that it does more harm than good, which means there's some good steps that have been taken. But I think let's have this conversation around what providers are doing at the moment to leverage technology. And here, I think Mfundo, I'll hand over to you first, then Tabo, I'll hand over to you, and then we can go on Puri. If you could limit your responses to 2 minutes, that would be, or 1.5 minutes if possible.
1.5 minutes, yeah.
There we go, Mfundo.
I can go for it. Yes, indeed. There are very many of these solutions. Here at Nedbank, we certainly provide mobile money. We certainly provide also money app banking platform to facilitate ease of transacting whenever and wherever it may be. As I've said, we also have a USSD cell phone banking capability that allows also for the feature phones to be used for transaction capability. So this is not a service that is available only for smartphones, but actually straddles the entire spectrum. And so that is available. And then I've said, particularly in the context of COVID, we've had to accelerate our programs to ensure that we facilitate delivery of solutions with reduced human interaction. That is what COVID imposed on us all. And these digital channels have proved worthy in continuing to provide for the delivery of financial services to our clients, to our customers, as well as the associated delivery of the final goods purchased. In this regard, we launched the AVO platform, which is a beyond banking platform delivering not just financial services, but also the delivery of goods and services to the convenience of our clients. What we've used digital transformation for, among other things, is also to make it easier for clients to be onboarded by the bank. Traditionally, bank clients have always onboarded along product lines. Now we've created a client onboarding layer at the top, and so you become a client of the bank. And once you are within the banking system, you can access products and services as convenient to you. And therefore, it allows us also to avoid repeating asking clients same question over and over again, because we would have that information in our databases. There's an element of convenience. It comes with cost reduction. It makes life easier for us as a bank, and therefore enhances our ability to respond to the needs of the client themselves. Finally, the point I would make in this regard is that perhaps the question has been asked about the takeoff, what will drive this. We've got to drive harder to get the alignment of the requirements, the alignment of the ecosystem, so that we can see a massive takeoff of this direction of travel. The starting point for South Africa is relatively much higher. They already much higher participation rates in the banking system. As I've said, once you look inside that system, you'll find it is graduated. Our drive is to increase participation rates along that curve and push people to participate at higher levels based on sound and appropriate advice. And so it is necessary that people are educated about financial services, products and solutions available in the market, and that these solutions are also appropriate to their needs. And so that will continue to be the case. I have to make the point that financial services and banking specifically is a regulated industry. And therefore, for the credibility of our system, we've got to make sure that we continue to evidence knowing our clients. Those are the basic requirements in banking. This will also help us to guard against other risks, because in order to transact through the formal system, The financial institutions will have to know the source of funds, will have to know who's transacting with whom to avoid such risk as money laundering. And so the requirements of documents and papers may appear as a source of inconvenience upfront, but actually it is critical to de-risking the system for everybody so that we can participate with higher levels of credibility. That's a minute and a half, Herman. Thank you.
Thank you, Mfundu. So I have some questions, but I think for the sake of time, let's go over to Thabo. Thabo, just you have the opportunity to work across the industry as well. Like we've had some feedback here, like, you know, obviously on our end, like Mfundu has noted, there's lots of ways in which digital has transformed the way that we work. And we want to use that in a way that meets the needs of our customers and includes more individuals. We have some sense from the panelists that, you know, we could go further from the way that we implement technology towards this end. From what you've seen in industry, what are your thoughts?
Thank you once again, Herman. Yes, if one observes the trend that has been happening over time, we recognize that the financial institutions, especially the banks, are taking advantage of technology. You may have experienced it as well. Everybody on the line may have experienced that you find that if you go to a branch, if you are like me, you're old and you still prefer the soft touch and speaking to a person, you will wait a bit longer, even though you will wait comfortably. You're not standing in a queue, you're now sitting waiting for your number to be called. But you will find that as that happens, you are encouraged via punishment or nicely nudged as well to go use technology. It started off with the ATMs to say that if you are going to do cash deposits and things like that, it's a lot cost effective to do them on the ATM than bringing them into the branch. You find that as you talk to the financial advisors, they encourage you and they will tell you what you can achieve, even opening an account on your mobile. So we have observed that, and we have even one of the ways that we measure this transformation in South Africa is via the financial sector code. You knew that I would mention that at some stage in any case. So in that way, a relevant pillar that measures financial inclusion is access to financial inclusion. And it has, I'll go very briefly, trust me. We measure geographic access, which is the footprint of the branches, the ATMs, and the point of sales that are available in the country. We also measure densification, which measures those facilities that I have mentioned just now versus the population in the respective target markets. We also measure the number of active accounts as well as electronic access. Now, the electronic access is the one that talks to technology, and you find that we find that honestly the industry is increasing, the trend is increasing, the performance is increasing, and we see this in the annual transformation reports that are published by the Banking Association, as well as other institutions, that electronic access is increasing as people get to understand what is available and what can be done without getting out of one's house or area of residence. So yes, the sector is utilizing technology to achieve inclusion.
Fantastic, thank you. For the sake of time, I'm going to jump into our next poll for the audience and then to the last question, which I think takes us just a little bit further into like what do we need to do more? Because I think there's obviously a lot that has been done, but you know, what should we do going forward? And I think that the poll to the audience, before we start getting into like the nitty-gritties of what we need to be done, the question is there a clear business case for financial inclusion? So we spoke about the target audience, we spoke about technology, we spoke about how technology is changing the way that we do business. Now the question is, with all that context, is there a clear business case for financial inclusion? Okay. We'll keep the poll open for another 20 seconds. Is there a clear business case for financial inclusion? Yes, no. You can skip the question of does more harm than good and go to unsure. So respond to one of those three. And then as you're responding to that, panelists, the next question which we will cover is what still needs to be done, or where are the opportunities to leverage technology to achieve meaningful financial inclusion. So here, going forward, in the last remaining 10 minutes, give us your top, what is the most or the second most, the top 1 or 2 priorities of what do we need to focus on, to make this work, to really leverage technology to achieve meaningful financial inclusion. So we see the results here. Is there a clear business case? 57% say yes, 13% say no, and 29% says unsure. And I think this is one of those repeating question over the last 30 years as we've been trying to shift how the financial sector serves the excluded, particularly post-apartheid. The business case for this has always been the clear thing needs to be unlocked, and technology could contribute to that. But let's give over to each of our panelists to give us their take. What still needs to be done, or where are the opportunities to leverage technology to achieve meaningful financial inclusion? Mfundo, I'll go with you first, then Velancourt-Sini, and then Thabo, and then Mamapudi. 1 minute each, your top thoughts.
Yes, technology provides the enablement for financial inclusion to be done at scale. The fuel of the future economy is going to be data. It already is data. Yes. And so the more we have access to that data, the more sense and meaning we're able to make of that data, the more predictive our analytics of the data at our disposal, the closer we will be to understanding the clients and their needs. It is that understanding of the client needs that will help us to better service them. And so technology enables all of that. It gives us scale. It makes it relatively easy, therefore, to meet these requirements across the board. And I think it's not just technology on its own. It's technology combined with people. It's technology combined with understanding the people's needs, using data and information in order to better predict consumer behavior, to better predict consumer future needs. And so ultimately, that is how I understand that relationship. Even when you say you're providing digital channels, it does not mean that the client, the customer, does not want to talk to a banker. So these are not mutually exclusive. I will provide a digital channel to facilitate a convenient transacting. At the same time, if you want a human interface, you want to engage with me directly, or you want to have a conversation with me over the phone, I'm still available to the client. Where value add will come in. This is how I understand the future evolution of banking. Thank you, Herman.
Thank you, Mfundo. Thabo, your views.
I'll be less than a minute. First, I believe that the banks are already doing a lot in this space, but I don't think many people know what it is that we're doing. So maybe we need to communicate a lot as to what services are available, how they are accessed, and how to navigate them securely so that they can be done. That's my first point. The second point is that as I was growing up, if I ever grew up, there was this notion of bank assurance where the banking industry was actually working very closely and even seeing the need to conglomerate into one thing with the insurance industry. I think there is a need for a similar initiative between banking industry and the fintechs or the mobile network operators in order to, so maybe that is the next step that we need to do if it is not happening already. Thank you very much.
Thank you, Thabo. Mamapudi.
Okay, quickly for me, I think the most important thing is we know that everyone talked about data affordability being an issue. So I think data costs to make technology accessible. Is it what can the government do? What can ICASA do? What can we all do? Zero-based costing, we know that we want people to transact, we want people to use technology, but at what cost? What are we all putting in to make it possible? Number two, we know that digital assimilation, particularly for financial transacting, is a psychological barrier for the financially excluded people. So how do we bring that language? How do we use technology to ensure that our communication, the terminology, the words, the meaning that we do, does reach those that are financially excluded? We've all talked about them being lower income, though being in rural areas. So why do we then keep on using these big bombastic words? Even worse with technology. How do we get to the level of the people? Number three is about collaborative efforts. We know that financial inclusion talks to whether you're in retail, whether you're in telecoms, whether you're in insurance, in banking, how do we collaborate so that the messaging, so that delivering the message does not become too expensive, but we all work together. We all work together to make sure that we remain truly to doing almost like a paradigm shift to say, how do we then truly bring people to be financially included? It's not about me saying, as a bank, I want to obtain so many accounts. What if they remain inactive? So how do I work with other people in the industry to make it work? Thank you.
Thank you so much for that. Vena Cosini.
Let me try to be quick on this, Hamed. So, well, I guess there's a what needs to be done. There's a need to support alternative pro-poor financial inclusion initiatives, and there's a lot we can learn from other regions, as I said in the past. So, for instance, we have seen the rise of mobile money initiatives in sub-Saharan regions like Kenya. So, however, due to stringent banking legislation, South Africa has largely lagged behind on this fact. So there is evidence, however, that formal banking systems and mobile money market work in a perfect balance, harmony together. So for South Africa, the mobile money and bank smooth integration prospects position banks rather at the right spot, since most of them already have their own communication companies and infrastructure, or if not outsourced or so. So the benefit is that South African banks can adopt mobile strategy as aggressively as communication companies, and the value chain and on client data and client solution will still be kept in-house. So as Fundo saying, we can't just ignore the amount of data that we are losing on the unbanked, which is because bank data is essentially the future.
Thank you so much. And if I look at the comments and questions, I think one of the things that strikes me the most in the feedback that's being provided, the comments and the questions, is the importance not to lose sight of who we want to include, and for us to do this in a humane way. We often have very blunt strategies or policy objectives or various instruments that we're applying, and we can lose sight of the individuals which we're doing all this effort for. As we're running out large transformation projects, we can forget that the individuals that we want to include are individuals who could be nervous about adopting new digital technologies, new financial services, or whose focus in life is not financial services. They have other goals and aspirations, and financial services is not the thing that's top of mind for them. Like that's a means to an end, and sometimes we forget that in the financial services sector, that people have a life with aspirations which go beyond financial services, and that our role is to enable that, and we mustn't lose sight of their hopes, their aspirations, as we put together our strategies and implement those. So Thank you, panelists, for your time and effort, and mostly for your dedication within your careers to this really important question of how do we extend meaningful financial inclusion so that we can contribute to the transformation of the post-apartheid South Africa. So thank you for that. For all of those who have provided comments and the questions in the chats, thank you. I saw some of you providing responses to each other, so apologies that we couldn't get through all of them to date, but thank you for your engagement in the polls, and we look forward to engaging with you in future roundtables like this or other platforms where the panelists engage and where Nedbank engages as well. Thank you so much. Have a great day.
Thank you.
Thank you.
Thank you very much. Thank you.
Thank you, Herman.
Thank you.
Thank you, colleagues.
Thank you, colleagues.